Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. Taking a look at Meta Platforms, the parent company of Facebook, Instagram, and more. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio. Landon, thank you so much for joining us today. I just want to put some pictures up on my wall. Do people even do that anymore with Facebook? I don't know. So I know you've got data looking across the landscape of, social media, for instance. So how does Meta and its properties stack up against, say, a TikTok or Pinterest, et cetera?
Yeah, so actually we've kind of got two different views to look at here. One is, how many people are visiting these properties, just users, end users, which is a really important metric. And then the other is how many people are visiting the ad sites. So they want to go in and place an ad. And so what's interesting when you look at these, you pull one of them up, you pick, I don't care. But if you look at just the overall change in time of visits, this is users, number of people going to these websites. You can see TikTok doing very well on a year-over-year basis. Pinterest, obviously, plus 14 strong. Instagram is actually pulling the weight when it comes to the Meta properties. Facebook is falling off. As you say, people aren't really posting on their walls much. So down 4%. It's not terrible. It's not falling off a cliff, but it is negative, which obviously you don't want to see it as an investor. But Instagram has been pulling the lion's share of the weight for quite a while. It's been driving all the engagement. In fact, the time spent on video on Instagram is up 30% year over year. Video is the key driver here for most of these properties. But yeah, Meta is more reliant on Instagram, and it's kind of, it's doing okay, but it's not doing great. And I think that's really what happened on that last earnings report, where they went from 750, now we're down to around 610 or so. So quite a big sell-off. But if you look at how people are, how many people are going to advertise on these sites, it kind of tells a really interesting story. So the other chart where you've got people going to these ad spend sites. So again, Reddit obviously stands out. Now that is it's a part of a function of, last year's denominator. This is a year over year chart. So plus 600%. There wasn't as much advertising happening on Reddit. So it's a huge growth driver for them. They're jumping out there. Pinterest almost doubling on a year over year basis. But you can see here, Facebook overall plus 21%, strong number. More people are going to advertise on their platform than they were in the past. It's a very strong number. In fact, a lot of people are skipping a lot of the aggregators. So if you want to look at Trade Desk, for example, that's why it's struggling more. But if you look at how Meta is doing overall, the revenue was up 26% last quarter. There is a bit of a post-election spend decline going on across the board, but you can look at here, you can see that, yes, Facebook is not doing great. Instagram's doing okay, but people are looking to spend more on their platform. I think what kind of shook investors last quarter was just how much money they're willing to spend, or they're going to spend into AI, and they're kind of going all in. So when we look at the data, it's clear that Meta is doing okay. Facebook, not so great. Instagram, pretty well. But more people are looking to spend. But across all of the competition, I'd say that Pinterest is actually probably the one that's the most sort of undervalued here. They took a big hit on recent earnings of 38 cents that were estimated to be 14 cents, took a big hit on those. They got the lowest PE and some of the strongest ad growth there that you've seen. But overall, I think that Meta's doing okay with this 27 PE ratio. It's fairly valued, especially now that we've sold off from 750 down to 600. But people are definitely going there to advertise more than they were last year. But I think investors are just a little worried about how much money they're going to pour into AI and what kind of return they're going to see on that.
Yeah, Landon, they basically raised the bottom part of their guidance from 68 billion to 72 or 70 billion for this fiscal year as far as spending goes. But the stocks pulled back 23%, Landon. I was hoping that we would see one of those charts where your data shows what they stated on their last earnings, that their user growth is improving, their revenue per user is improving, their growth rate for this year, fiscal year, is expected to be above 20% again. And they've got, over 3.5 billion daily active users across their platform. So they have the eyeballs, and they're able to monetize these advertising dollars better than their competitors like Pinterest and Reddit and such. So when you guys look at that with your data and where the stock price is now, $70 off its 200-day moving average. I mean, does this start piquing your interest like it did, in the stock that popped yesterday that we talked about the other day, post earnings? Yeah, I mean, I just think, is there some type of discrepancy that we have to start taking a look at here?
I think so. I think anytime you see a move like this, 750, call it 600, we'll round it. That's a very significant move. So the company was either extremely overvalued or they're starting to struggle, and I can confirm they're not struggling. I mean, if you look at the data, they've got solid numbers on a year-over-year basis. Instagram's up 11% on number of people, number of visits, and we know that the time spent is going up significantly. Again, investors are worried about how much they're spending on AI, but AI has resulted in a plus 5 to 10% time spent across all of their platforms. More time spent, obviously, is more advertising dollars. And speaking of advertising dollars, again, that number was plus 21%. Number of people, number of businesses going to the ad spend site to go spend ad manager site. So everything that we've got says that they're probably undervalued at this point. So yes, I know we don't have the two line charts where we would see a divergence, but you would see a divergence with ad spend up 21% and Instagram up 11%. Even though Facebook's shedding a little bit, it does not does not match or justify this level of sell-off in the stock. So I think they're undervalued here. And again, look at the PE ratios. It's not ridiculous. 27 is kind of high, but it's not ridiculous. Reddit, on the other hand, at 87, there is a ton of growth priced into that. And you can see on their last earnings report, they crushed estimates and didn't go anywhere because there's just so much growth priced into Reddit. So I think that Meta is very fairly valued here, possibly undervalued, just based on the strength that we see. And if you look again at the growth rates is one thing. Yes, Reddit has plus 600% on the ad site. But if you look at the mind share, which is, look at all of the visits to all of these advertising platforms, put them into sort of a pie chart. Meta is 40% of that pie chart. Google's 45%. Reddit chips in at 5%, right? It's so tiny, it's somewhat irrelevant, whereas Meta is commanding almost half at 40%. And like you said, almost half of the world's population are daily active users. That's insane. I mean, that's just such a wild stat. So yeah, I think that they're probably a little bit undervalued now at this point, and I'd feel comfortable going into them.
Okay, I'm glad you mentioned that because Wedbush put out a note today adding Meta to its best ideas list. So it sounds like there is some increase in conviction. One of the things that they talked about is obviously the spending, and they said they think the risk reward is compelling with limited downside from here after that recent pullback in shares. They've got an overweight rating on this, so obviously they're bullish on this, and they, dismissing the concerns, because one of the reasons that we know it sold off was about CapEx, right? Which it seems like the view by investors is one day they're happy with what Meta's spending, then the next earnings cycle they're not happy with what Meta is spending. So it sounds like you share a similar conviction. The one thing I do want to go back to in your chart is how Instagram compares to TikTok. Obviously, TikTok is not traded here, but I wonder if there's something to keep in mind. Is that a potentially, maybe not a red flag, but a yellow flag to pay attention to as a risk factor for Meta and its properties?
Absolutely. You don't want to see this as a Meta investor. I mean, they are very, very similar platforms in how they operate. And so for one to be at plus 11, the other to be at plus 33 is definitely concerning. That I think that would probably be, of everything, and a good pickup, by the way, everything that would be the biggest yellow flag of all of this. You would like to see those two growing at around the same rate. So now you're asking as an investor, well, what's so much better about TikTok? Why are they able to get people coming to their platform at an increasing rate, more so than Instagram is able to? So yes, I would absolutely agree. Back to the CapEx, though, I will say that, I know that investors are fickle. They're going back and forth. But Zuckerberg has stated, I mean, you're basically front loading. He's basically saying we're going to spend this money eventually to get in place, to get our company in line with the day that super intelligent AI is here. Why not do it now so that we're ready when it comes? And if we're early, fine, we'll use that for something else. And like I said, they've already increased the length of time that people are staying on these platforms by 5 to 10% because of AI. So even if they're early and it's a bit of a, air quotes, waste of money now, they would have spent it later, and they can put it to use now. So as a tech entrepreneur, I can tell you that AI is only helping development, only helping things. So you might as well do it now. So I'm on board with spending a ton of money now if I'm a Meta investor. Let's get the best technology we can, and then when the AI gets super intelligent in the future, we're ready to go and we can take full advantage of it. So I'm on board with his strategy. And again, at these levels, I like it. But yes, great point. TikTok beating out Instagram is a little bit of a concern.
So that begs the question, is this the real Landon Swan or the digital version? I know it's the real one right now. All right, thank you, Landon. We'll leave our conversation there for today. That's Landon Swan, co-founder of Likefolio with a look across Meta.